good news, everyone.
Thank you. I was about to ask you to do that. It's like once we get to 5, you notice it. Thank you. So this made me very happy the other day, and I think you all will enjoy this as well. Meta sheds over $230 billion in the biggest drop to shake up Wall Street.
Oh, where'd you read
The Wall
that?
Street.
Oh,
I
that's the
got
whole
it.
title. Okay.
Yeah.
Sorry,
Yeah.
I'm.
The Wall Street benchmark slumped on Thursday as Facebook parent company Meta's stock marked a record one-day plunge following a disappointing earnings forecast that shook the global tech landscape. Meta's stock plunged 26.4%, erasing more than $230 billion in market value, comparable to the size of New Zealand's economy. The largest drop in history, after its results raised doubts about the troubled social media giant's future. Because Meta is valued so highly, a big swing in its stock price can also sink or lift broader market indexes. The S&P 500 index fell 1.6%, and the tech-heavy NASDAQ fell 2.6%. The Dow Jones Industrial Average, which does not include Meta platforms, fell 278 points or 0.8% to 35,351. Meta sank after forecasting revenue well below analysts' expectations for the current quarter, a disappointment for the company that investors have become accustomed to delivering spectacular growth. It is also reported a rare decline in profit due to sharp increase in expenses as it invests in transforming itself into a virtual reality-based company.
Hey,
Ahead of
hold
results,
on. Something's bothering the shit out of me. You see this Succs?
yeah,
You see how it's like broken right there?
yep.
Oh, that was just the Zoom
It's
logo.
not. It was. Yep.
Hold on, wait for it. Right there, it's broken.
Yep.
Uh,
Yep. It is.
that bothers the shit out of me. Fuck.
Ahead of results, analysts expected the 1.5 billion daily active users on Facebook, but Meta reported only 1.93 billion. That's not that much of a difference. A key indicator for where the platform is headed. On the financial side, Meta reported a turnover of 33.67 billion, in line with its forecast, but it made 10.3 billion in net profit in the fourth quarter, 8% less than last year. Investors also recoiled at Facebook's report of losing roughly 1 million daily users globally between the last 2 quarters of 2021, a fraction of the total, but a potential sign of stagnation.
You know
It's
why?
the first because they're a shit platform.
No, they've been banning people left and right over stupid shit. Half of their numbers were fucking fake accounts anyway. They cleaned them all up. And then, hey, there's Digitiaga
What's up,
coming in with the
Digi?
raid. Welcome to Subpar News. We're talking about Meta. Digitiaga.
Yep.
Digitiaga.
It's the first time ever the user base is shrinking, said analyst Adam Sharon from 50 Park Investment. If the company is not growing, then it's a complete reset for investors, he added. But you can't have forever growth. You can never have forever growth.
No, not without conquest.
Yes.
And then
Pretty
eventually you kill everybody, and then that's
Yes.
yeah.
Then you have to cannibalize yourself.
Right. Which is, what they're doing now.
Yep, that's the point we're at, everyone. It's essential to note that Meta is still massive and growing on the whole. As 2021 closed, 2.8 billion people use one of its 4 platforms and messenger services at least once a day, and 3.6 billion at least once a month. One way out of Meta's troubles would be to acquire the next big thing in social media, as it has done previously, but the company is under considerable scrutiny from the United States regulators after damning allegations that emerged from its whistleblower crisis last year. The steep drop weighed on fellow social media company Twitter, which shed 5.6%. Snapchat's parent company Snap sank 21.6%, and Pinterest lost 9.3%. Big tech stocks such as Alphabet Inc. and Microsoft Corp fell about 1.3 and 2.3% respectively, while Amazon.com declined 6.5%. Needs to be more.
We got to get those numbers up, yeah.
Yeah. Big technology and communications companies played a big role in driving gains for the broader market throughout the pandemic and much of the recovery in 2021. That's something I think they need to look at. During the lockdown, all that shit grew substantially because we were all fucking in our houses.
Yeah.
Now that we're going back out, that they're going to have shrinkage. It's like going outside when it's cold naked. You're going to have some shrinkage, okay?
Yeah, definitely. Definitely
So
shrinkage.
there's
It's definitely not just 1 inch normally.
yeah.
No, it's the cold.
Okay.
Yeah.
Okay. I think you might have shared too much. Big technology and communications companies played a big role in driving gains for the broader market throughout the pandemic. And much of, oh, yeah, we already read that. There's a general sense that what's been moving the market higher is not going to take us to the next level, McMillan said.
Oh
The question
no.
is, where is the next growth engine coming from? He noted. Communications and technology stocks had some of the biggest losses. The sectors have been behind much of the choppiness in markets since the beginning of the year as investors shift money in expectation of rising interest rates. Higher rates make shares in high flying tech companies and other expensive growth stocks relatively less attractive to investors. Bond yields rose sharply on Thursday. The yield on the 10-year Treasury note, which is used as a benchmark to set interest rates on mortgages and many other kinds of loans, rose to 1.83 from 1.76% late Wednesday. Wall Street anticipates the Federal Reserve, or the Fed, first interest rate hike to come in March, and it is cautiously watching for how the central bank paces future increases to help fight rising inflation. It's not a perfect path. It'll be bumpy, but the direction is pretty clear here, said Gary Labat, chief fixed income strategist for Janney Capital Management.
Are they really
Inflation will
are they really blaming inflation for Facebook fucking up?
no. I think that they're just using that to explain that as inflation goes up, people will pull money out of those stocks because you're going to have to pay a higher interest rate
Oh,
on
okay.
your gains. So they'll shift money out of those into stocks that aren't quite as much.
At least somebody's paying attention.
Inflation will likely persist until supply chains loosen up and help ease costs for businesses, which that shit's fake anyway. Okay, we have to pause right here for a second. Okay, we are going into we're in February, right? What's the big thing in February?
Valentine's Day?
Valentine's Day. What do people get on Valentine's Day?
Shitty candy?
Flowers and shitty candy. Suddenly announced this week, guess what we're going to have shortages on in the next week to two?
Candy?
Candy and flowers.
That happens every year. That happens every year
Once-
because everybody buys it.
Yep. But now suddenly prices are going up on those items because of supply chain issues.
Right.
Fuck off.
Yeah, and then
That's all I'm saying.
they're gonna blame the truckers and shit who are on strike trying to get a fucking living wage.
Yep.
Well, they don't want to. Nobody wants to work. No shit.
So, yeah. Inflation. Okay, yeah. It says still the Fed needs to convince people that it's taking steps to fight rising inflation. The idea is that raising short-term rates reduces the perception that inflation will be higher in the future. If the Fed successfully pulls this off, then expectations won't rise. Investors have also have their eyes on monetary policy updates in Europe. The Bank of England raised interest rates for the second time in 3 months on Thursday, putting the UK far ahead of the rest of Europe and the US in moving to tame surging inflation that is squeezing consumers and businesses. In contrast, the ECB doesn't plan to raise rates until 2023 despite record inflation, blaming it on temporary factors. But it has decided the economic recovery is strong enough to start carefully dialing back some of its stimulus efforts over the next year. Spotify slumped 16.6%. Oh, you know what? We're just getting into other stuff
This is
now.
just it's almost at the end, but basically, did they just take that whole time to deflect from the fact that Facebook sucks?
Yeah, they did. But yeah, the point is, Facebook lost $230 billion, all because it lost 200,000, or excuse me, all because it lost 2 million subscribers. Think about that. Because it lost 2 million people, expectations it dropped $230 billion.
Yeah,
That is insane.
that's a lot of power in being able to move yourself from a platform.
Yes, it is.
You can make them do what you want.
Pretty much.
It's fantastic. Fuck Zuckerberg, you little dick. You little fucking weasel. You fucking nerdle.